What's up YouTube, it's Todd Horst here with Tasty Tracker, and today I'm going to do another 2020-2021 small account challenge update. So first, to get started, let's look at SPY. Today we are down, but not much. We're sitting about the close or the high of yesterday. Yesterday we established that this green line here is support. It had previously been resistance back in here and in here until it popped over. So I would not be surprised if we come back down here to retest support. We have had a nice run up here, so it seems like it could be natural that we have a bit of a rest up here. Obviously that's not necessary. We could also see something like this where we get a little bit of a incline similar to this area or this area. But yeah, so far SPY looks fine to me. Nothing too eventful. So the Robinhood account, today we are up almost to $800, then back down to 6 3/4. So don't you love Robinhood? So it's unfortunate. Again, I keep saying this every time, but right now we have about 50% of the portfolio in tech, so it's not even that out of line of what it should be. We have Microsoft, obviously, and Qualcomm. Plug and Tesla I would not put in the tech industry personally. So let's jump into Microsoft. If I look at the all-time here, we definitely came up here in the past weeks as the market was totally bombing, but we're back down to a pretty sane level. And so if we go over to Microsoft, we can see I have not rolled this position. And so I'm still going to shoot for the 50% closing order. The sold leg is 240, so let's go ahead and look at the chart. Okay, so we're hovering around $1, $1.50 yet. And we even came up and touched it today. So I'm definitely not concerned where this strike is placed. We have the whole way out here till April 16th to get above that strike. That seems totally doable. The 20-day has been acting as resistance. You'll see this on a lot of these charts. But the MACD and RSI are really just starting their uptrend. And so I would not be surprised if we have another up day or two and then come back down here to test the 20-day to see, again, if it's valid support. It doesn't have to do that. It can certainly keep coming up if we draw a line like something like that. So we'll see. And if we do get 25%, maybe I might take it off early. It really depends on how this develops. If it shoots up and it looks like it's going to continue, then we'll keep it on. But if we come up here and hit this resistance, which is very, very possible at 245, I might just take whatever profit I have and walk away and try to set up a better position a little bit later on a different ticker. But for right now, I'm going to still be aiming for 50%. So Plug is the next one. So Plug is basically back out to what we had rolled it for. This one was a rolled one, which means I'm going to be, since I rolled it for such a large debit, I'm going to try to close it for a scratch. If I held to my normal standard, which is to not roll for a debit, just to close it, then, or I roll for a credit, then I would still be aiming for, the 50%. But because I had to roll for such a large debit, it killed the risk reward on this one. And so basically I'm going to try to get out for a scratch. So that's around 155. So if we look down here on my pending order, I have it set for 155. That would be a gain, of $300 because right now it's sitting at 455. So I don't know that that's going to happen, but if we go over and look at the chart, it is definitely feasible if we follow this red line up, the trend that it's kind of been going. We could get to where we need to be at the 60 strike near expiration. So anywhere in this range, I might be able to either roll for credit, which I would do, or close it for a scratch loss. So either one is fine with me. But at the end of the day, even if we close it and, say we close it for $200, and so that will be taking a loss of $50, that's still way better than having closed it back here at almost a full loss. $500 is a full loss. So 465, and that's just what Robinhood has. But yeah, so if I can, even if we close it down in here, we saved ourselves $60. So yeah, so that's what I'm looking for. Of course, today's not looking nice because we came back down and are retesting my red line, and this level of support here that I have, this yellow line. Let's thin that out a little bit. So, and then I would drag it down. Something like that is a little bit more realistic. So, but anyway, we're testing that support, also testing the red uptrend line. We have broken through this red downtrend that I have, which is comforting to me, even though we are coming back down and testing it. Again, we're following the 20-day down. So in the next day or two, I definitely anticipate a pop above the 20-day. And if we can get that, then we might get some momentum up until we get to the 50-day. So it could traverse here rather quickly up into the $54 range. Again, MACD, RSI, I haven't really started. So yeah, this like all the other ones is to be determined. This one's definitely on the edge though, and I would be totally happy getting out for a scratch, which would just essentially be a waste of my time, but that's better than losing money. Okay, so QCOM is the next one. This one is not a rolled position. Where was I? So QCOM, the break even now is 172. We have not rolled out, so technically I'm going to be shooting for 86, but let's go ahead and see what the chart looks like. We need to get the whole way up to 140, which is up here. So again, this isn't too far off. This is only $6 off. And we've only really started the uptrend here on the MACD RSI. Earnings is coming up, so I prefer not to roll it out. But definitely shooting for 50% is a good idea. Again, 20 days acting as resistance at this point, but so I would definitely kind of expect a red day tomorrow to come back down here to this gold line. But we've already broken through this downtrend. And so within the next 2 to 3 days, I would say I would look for a pop over the 20-day, and then we're shooting up again to the 50-day at 145, which is where resistance is. Again, at that point, I might just consider exiting for a scratch with this one and Microsoft, because there's a good chance that it could come back down and just be in a funky zone right here before expiration. And so if I can avoid that and get out for a wash and just reallocate that capital, then I'll put that capital to use somewhere else. Because now we've got 2 levels of SMAs here that we would have to break through, so that's going to be harder to do. Okay, so the next one is Tesla and the 785. So again, because this one was rolled, I'm going to try to close this one for a scratch. I'm not even going to bother to go for the 25%. So I'll put 1.7 in. I don't think I have the closing order set up. Nope. 1. Good till cancel. 1.7. And so yeah, if it came up and closed for that, that'd be another $200 or so that I would get to save. So it really doesn't hurt at all to put this in. Again, we definitely bought ourselves a little bit of time and money here. It was at 478, and right now we're trading around 350. I'm going to ignore today until it figures out what it wants to do. Tesla jumps around a lot. So yeah. So can it do that? 785 is on this yellow line, and we're kind of in this pretty tight channel here. Let me widen it out a little bit. So again, MACD RSI still have some room to go, kind of following the 20-day down. It did break above yesterday a little bit, but now back under the 20-day. So again, next 2 or 3 days, we'll be messing around in this area and then hopefully get a pop above the 20-day, and then we should have a little bit smoother sailing up until the 50-day here. We do have this to contend with, but we've also been hitting that area here anyway. The 720 back here acted as resistance. So Yeah, the goal here again is to aim for a scratch, just waste time and not money if I can. I think that really covers it, but let me know if you have any questions and I'll get back to you. Thanks.